Okay, just a few minutes away from getting started. If I could just get everyone who is on the line already early or on time, just to confirm in the chat bar on the right-hand side of your screen that you can see and hear correctly. As soon as I get a few yeses coming through, it'd be great if you could do that as soon as possible. I'll get started for this evening. Good evening, my name's Jacob Field. I'm going to get started right on time. I apologise for if there's anyone arriving late, but it's worth getting underway as close to 8 o'clock as we can. I'm going to get started right on time. I apologise for arriving late, but it's worth getting. Okay, sorry about that. We're just getting everything organised and jumping underway. I did just do a quick audio-visual check and we have worked through getting that set up and getting underway. So thank you to all of those who have said that you can see and hear correctly just before we did get started. I have shared a URL there, a YouTube link that you can click on directly. I've had a couple of you already, Craig mentioning that the slides and Sandra, that the slides are a little bit blurry. If that is the case, click on that link that I've just shared. I'll share it again right now in the chat bar on the right-hand side of your screen. That will take you straight through to YouTube directly to view us this evening. You might, you're not going to be able to comment directly on the feed, but you may have a slightly higher resolution image without the fuzziness as some of you are reporting. That may also be caused by other things that might be draining your internet connection, other videos that you may be watching or sharing the connection. So do make sure to close all that down. Otherwise, reduce the size or resize your browser window. It tends to refresh the transmission. And then you've also got a reconnect button on your browser that you can actually reload and get started again. Otherwise, there will be a recording coming through. We will be having a Q&A, a question and answer session at the end of this evening. Content in about 50 minutes with that 10 to 20 minute Q&A at the end. So I will be stopping for questions throughout. If jumping in, it's going to be really trying to be a conversational style this evening. If you do have any questions at all, don't hesitate to jump onto the chat, the comment section on the right-hand side of your browser there. And if it is relevant, I will stop and answer it right there and then. Otherwise, I'll gather it up towards the end and we can get onto them together. So that's obviously only for those of you tuning in live, but there will be a recording with a very clear picture coming through after the webcast is finished. So I'll jump right in. Thank you for your patience with the housekeeping there. Tonight is all about using technology and the Ripe House research tools, but you are going to be able to see the concepts that are employed and used and take them away with you outside of the Ripe House platform and potentially implement for the rest of your investing journey. But tonight's all going to be about finding the absolute pinnacle of opportunity and potential in capital growth and yield, and together. Okay, so within the last week, it was earlier on this week, I was reading an expert in the industry commenting in a mass media outlet, talking about should we go after growth or yield? You know, one or the other. You know, growth at the expense of yield and potentially negatively gearing, or chase yield at the expense of growth without any growth but strong yields. And I just, you know, I see this regularly, I suppose, and always have a little bit of a chuckle, because we have been able to successfully use technology, which you'll see tonight, to be able to get them both together. And in fact, there's a very strong correlation between really strong and healthy yields and outstanding capital growth. If you're looking for inappropriate appropriate properties in appropriate locations, there's a very strong correlation. So it's a definite, it's a really lazy answer to say that one or the other. You can actually have both in spades if you do your due diligence and you get it right. So that's what it's all going to be about tonight, in taking us through a process to be able to do that over and over again. We'll be really trying to dig into that process, the individual steps, and being able to recreate it each and every time we purchase. Okay, a little bit about me before we get started into the content. I've been investing for about 15 years. Started down here in Tassie, which is where Ripe House is based, which is where I'm based with my family. Lived in Sydney for a few years, and I do currently own properties across Australia. But then when I moved to Sydney and investing actively, I had to try and work out how to invest there, and that's where Ripe House was born. I've got a background in technology. Ripe House really started to help me understand the foreign market, understand price and how growth might occur, the location of amenities, and how to really find those areas that are going to really drive growth forward. So that's where Ripe House started to help me in Sydney myself. It's morphed, that was in 2011, by the way, so now it's morphed into helping other investors, empowering them with information, research and tools to be able to invest more successfully. That's what it's all about. So it's me as an investor coming and helping other investors and helping each other to achieve really outstanding things. So obviously I'm really passionate about property investments, technology and development, IT and development. And I also play basketball to try and keep a little bit of fit down here in Tassie. But I do have a couple of young kids, a couple of toddlers that keep my wife and I very busy. So to all the young parents out there, yeah, it sometimes gets a bit full on, and we're all a bit tired around here at the moment. Jumping right in, just a quick checklist over this evening in the content. Really trying to encourage it being super interactive. Jump onto chat. I'd love to hear if you've got any questions, where you're coming from, what you're doing in property. There's about a 20-30 second lag, so sometimes it might be a little bit, slowed down and stagnant when I am interacting, but it's still not a reason to not do it. It really works nicely when we can really understand what we're trying to do and how we're trying to do it, and do that together. So let's start right there. Jump onto the chat bar right now. Just say hi, who you are, where you're coming from tonight. It'll be great to know. Do you currently rent, own, or occupy, with or without mortgage? Currently own any IPs? How many, if so? And while we're waiting for those to come through, a little bit about us. So we currently own our own property that we live in, investing, as I mentioned, for 15 years, but it wasn't until our sixth property that we actually were able to live in a property that we own. So we were, I suppose that the term used these days by, or one of the, in the media and out there, is rent vesting. We were rent vestors for quite a while. To start with, in the early days, we did a lot of renovate for profit, and sometimes not so profit, but we learnt and evolved. Now I'd probably describe myself more as a cash flow investor, focusing on yield, but growth has to be there. So, our investment journey has morphed and changed. And yeah, as I say, it was our sixth property that we were actually able to buy and live in as a principal place of residence. So that was our journey. Okay, while those are coming in, I might just skip on and just introduce what we're actually talking through tonight. Sorry, just switching into here. Yeah, what we are, what we're discussing in the content is not some black box. We're opening up, we're throwing the keys and explaining all of the logic and the whys behind everything that we do. It's common sense, but backed by technology, by behaviour, research, and artificial technology. When I say that, it's not some futuristic goal or technique. It's using really smart technology to supercharge what we can do as humans, as investors, and really improve upon it, learn and see how we operate and what we do, and really try to improve it and get some amazing results. Well, I'll be sort of talking about, so the backbone of this whole system and what we do here at Ripehouse is what we call a Ripehouse brain. That's where the artificial technology really assists in giving recommendations for property in areas that are looking for imminent growth or cash flow. The backbone, and that's the backbone, the actual page that you can touch and feel that employs all of this technology is the Robo search page. So I'll be using that tonight to help us with our search. And there are, as you'll also see, lots of other tools and pages throughout Ripehouse that you can use in your search. So jumping in, a few of you, Adams, come on, principal place of residence with mortgage. So living in that, 3 IPs in the process of 4th purchased, all on East Coast of Australia. John's got 6 IPs currently living in the first property purchased in Sydney. Sandra has got, or haven't bought an IP yet, looking at purchasing this year, very good. And Bruce has got 2 investment properties and still renting. There's a couple of others that are slipped in there that are actually quite similar in what you're doing, but that's just really trying to talk through the spectrum, I suppose, of what we're trying to do and where we're trying to come from in how we're doing it. So, yeah, interesting mix in what we're doing. I sometimes have a survey, which just sort of give me a little bit of clarification about where people might be based. I sometimes have a survey at this time as well, and just asking where everyone's tuning in from. Generally, most of you guys are coming in from Sydney, but it would be great to hear from where you're tuning in from as well. We're obviously down in Tassie. Most of you are usually in from Sydney, but if you could just say, yep, tuning in from Darwin, it'll be great to sort of get a little bit of a bias towards certain areas, and we can focus on that in our learnings and research tonight. So let's jump right in. Meet the Ripehouse brain. Okay, so this is going to be really driving a lot of the technology, the tools, and the content tonight. The Ripehouse brain really digests a huge amount of data. So we actually track 121 metrics of information at a local government area, suburb and street level. It crunches all that information. It looks at how you investors invest, how you do it, what you're doing, and it learns from it and tries to improve and provide you with recommendations for property. Okay, so I might just pause things there and just switch over slides. This is the How It Works page for the Ripehouse brain. Sorry, this is the home page. I'll click on the How It Works page. Just a little bit of information. So we did in 2015 into 2016 go through a very rigorous process of interviewing and understanding experts across the country. So researchers, real estate institute members, advocates, buyers advocates, real sales advocates, and valuers, working out their methodology, how they found areas that were looking like, you know, performing or growth or achieving growth for them and their strategy. We understood that, we developed a methodology, we quantified it. Okay, so that was the baseline. Then we threw the keys over to Ripehouse users. So we actually had over 400 individual strategies that were programmed in by Ripehouse users, using all of those metrics to work out and improve upon potentially what the expert's doing, but then it was teaching the Ripehouse brain different approaches to achieve different strategic outcomes. So the Ripehouse brain is always going through big data, 121 metrics that we're tracking for up to 15 years for every suburb in the country. Huge amount of number crunching, but what it's doing, it's looking and it's finding circumstances and situations that are aligning for imminent and outstanding growth. It's using swarm technology, artificial intelligence, swarm intelligence, these, you know, funny big words, I suppose. What that really means is it's using a lot of computer power to methodically look through and replicate the human touch. And then it's also looking at what you guys are doing with the Ripehouse research platform and out there in the wider Australia, and it's seeing your behaviour, seeing swarms of movement, and it's learning from that as well. It's back checking any recommendations against previous circumstances where things have been similar, and it's able to give you a likelihood of growth, a ranking of growth, and then also a percentage expectation of growth. So in some cases tonight, you'll see very quickly and easily how you can zero in on properties that are looking and expected to, you know, there's no certainties obviously, but expected to grow by over 15% in the next year based on the back checking of those recommendations. So incredibly powerful, really interesting. I'd love to hear any feedback. If you've got any questions at any time, get in touch with us. We've got live chat there on the bottom right of each page, but it'd be great to, we're always happy to answer any questions that you might have, but this is what we're going to be referring back to tonight in the content. Okay, just jumping right forward. So what the Ripehouse brain does, is better. This is, the general process, how investors might go through the search for a property, but the Ripe House Brain looks at many different layers of the research and joins it together. It enables us to, which I will be referring to in a little bit more detail, increase our area of interest, our search, our catchment area to the whole country at once. Okay, so it's not just focusing on your local area as you as an investor might. It's not using subjective knowledge or experts in certain areas and having to moderate those experts. It's looking at the whole country. It's digesting it in live terms. It has to be timely. If it's taking 3 months to digest all the information, it's out of date. So that's a key component of this. It gets the LGA right. So it looks apples for apples across the country because it's looking at research data and technology. So it's not biased in some ways. It looks for the individual suburbs and then the streets set for absolute growth and leading that LGA forward. It matches and looks at actual demand in the suburb, in the street, and matches the individual properties on the market to that. And then it enables you and empowers you with information to be able to effectively negotiate and appraise property. That's what it's all about. It's an end-to-end mechanism to help you search for, recommended for, and then appraising properties across the whole country. I might just break that down a little bit further. First thing that does really well, and this is a takeaway for you in terms of how you can approach investing outside of the Ripe House Brain and Ripe House. This is a real takeaway for us to really think about, because one thing, I suppose, to be able to look across the whole country for the absolute best potential for your strategic outcome. So if you're looking for really strong capital growth and a 6% yield, there are certain places at any one time in the country that are the most likely to deliver that. Okay, so if you're limiting yourself to looking around, your neighborhood where you've grown up, where you might be familiar with, or even the city that you live in, there's not much chance that it's going to be one of those areas that are set to deliver your best strategic outcome. It's a bit of a luck box. It's a bit of a throwing a dart at the dartboard if that's the case. So what we need to do, we need to step outside our level of comfort, our area of comfort, improve our resources, our research, our tools, and our acquisition abilities to be able to look across the whole country, increase our catchment area to find that absolute #1 area set to deliver our strategic outcomes. Whether that's growth, cash flow, lower risk, longer term investing, renovate for profit development, whatever it may be, there's one place at the moment in the whole country that's going to be the most likely to deliver that for you, and we've got to be able to give ourselves the ability to find that. Okay, so that's what I mean about increasing your catchment area. The Ripe House Brain is very good at helping us do that. So there's one, the next point that needs to be made is there's no point in being able to increase our catchment area and look across the whole country if it takes us 3 months to collate and make a decision based on that whole country. We've got to be able to do that as if we were looking at the street that we grew up in, and we take it for granted that we know, and we know the heartbeat of that suburb. We have to be able to do that across the whole country in live terms. It has to be timely. It's critical to our success, because in some cases, to achieve our amazing growth, hockey stick growth, which I'll show you in a moment, I'll refer back to, is really outstanding growth. It may be a long patch. It might be 5 years before, with no growth occurring, a flat line, and then things really start to shoot off. And we want to position ourselves just before things shoot off, but not once they've already leapt, and we have to deal with a lot of other investors in the market and eyeballs there. So we have to position ourselves at the absolute optimum buying window. And to do that, we have to work on live data, actual current data. We have to increase our catchment area, but we cannot, in doing that, increase the time it takes us to gather and make decisions, okay? I might just pause things there and just make a couple of examples there with Ripe House and the platform, okay? So I'm just gonna log in at the top here using my information. What I'm trying to do now is just explain how we can actually do that using research and using software. What I'm going to be showing you now is the actual manual research tools within Ripe House. So we've got two silos. We've got one with comprehensive and very detailed manual research tools, and then you've got a lot more ability to customize it and bring it to you and your actual result. but it's obviously manual. You've also got a Robo search page, which does it all for you, and both of them in some ways are using the Ripe House brain and the artificial intelligence, but the Robo search page does it all for you. It's been 18 months in putting all the pieces of the puzzle together, 5 years in starting the process with Ripe House, but Robo search really does it all for you, getting you to those properties. So to illustrate and make the points throughout, I'll be using the manual research tools and showing you that, okay, as it breaks things down for us whilst we're going through. So what you can see here, I've logged in. This is the Ripe House dashboard page. You can see all of the great content that we have coming through from our contributors on the Frontier Investor. So if you haven't already checked that out, jump across to the frontierinvestor.com.au. That is our in-house research portal. We've got some amazing contributors who provide amazing content for us. No advertising. They have to be customer focused. They have to provide amazing information, unique information, customer value to be invited and contribute content to the Frontier Investor. We are a research and technology company. We're not interested in spruiking or selling. So everyone on here is all about you and helping and empowering the industry. So an amazing resource there. You can log into it directly or through your dashboard. You can see all of the information here. And you can also see where other users, so if you can remember back to those 400 strategies that the Ripe House users have actually programmed in, the best bits, you can see that some of the strategies that people are using and employing, and you can actually click on it and view the exact rules that they've actually designed for their strategy. And as a user, as a paying user, you can come in. This is playing with all of the 121 metrics. You're devising your own strategies. You can actually come in and use others as a baseline. So you can see this particular strategy. Population is trending upwards in the local government area. Average wage is also trending upwards. Yield is currently above 4%. Vacancy rate is under 3. Sold price is above 600,000. So quite a basic strategy there. The artificial intelligence sometimes combines lots of different metrics together to deliver you the optimum outcomes. But you can see and you can touch and feel other investors like you, and you can learn from each other. That's what it's all about within Ripe House. So this is just a really quick intro to the dashboard page. The first page I'm going to click on here is the State of the States page. This is showing us individual state level property clock information, but this is not your answer to increasing our catchment area. Okay, so we don't need to understand things at a state level to understand, you know, is there a suburb within that state worth investing in? We need to look at individual local government areas or suburbs. So this page here is telling us the property clock information for each state. But as you can imagine, I suppose, New South Wales, you've got Sydney that might be at 2 o'clock, you've got regionals that might be at 10 o'clock, you've got coastal at 11 o'clock. It's an aggregate at a state level, and it's a generalisation. It really doesn't mean much. So even though this page is here, it's really just a navigational tool. You can skip it. You can really drill down to the local government area, which is where you can really start doing some great apple versus apple comparisons. One thing you should notice, if you can, is the live heartbeats icon there. That demonstrates that what you're seeing there is actually calculated on the spot today. That allows you to make decisions based on real time. So Queensland is at 9 o'clock on the property clock. We always recommend between 8 and 10 o'clock is the optimum purchasing window for states, LGA, suburb. Click on Queensland, that's going to load up. You can drive into this via your dashboard as well. It's going to load up really deep dive information for every LGA in Queensland. You can actually see property clock information, all of the key metrics, LGA level health ticks. So these are just 6 basic metrics that we've got a really strong correlation towards imminent growth that we've been able to determine. Really quick look page to help us focus in on the absolute pinnacle of opportunity in LGA level in the state. So why don't we just select, I only want to see LGAs between 8 and 10 o'clock on the property clock. It's brought us down to a really nice, neat list. Some LGAs that are very familiar at the moment, Brisbane, Cairns, Gold Coast, Moreton Bay, Sunshine Coast, Toowoomba. They've all been jumping out in terms of, you know, me not as an expert or an investor. They've been jumping out and they've been consistent this whole of 2016. But one metric you can also see on this page is the opinion score over here on the right-hand side. So we actually go through and we have algorithms, and it's part of the AI engine and those expert interviews, monitoring positive sentiment in suburbs. So where experts in the industry, where media are talking about areas positively in terms of growth or underpinnings, it's applying a higher opinion score to those suburbs. That's doing that automatically. Okay, it's going out and it's gauging those sentiments from that content across the internet, bringing it together. The higher the score there, our algorithms are associating a more positive, the word is out, essentially. The higher the number, the word is out. The more prevalent the positive spin story of growth is happening in these LGAs, okay? Some of these have actually got too hot and the property clocks moved around to 2 o'clock and now are starting to slow down. So the Logans of the world, which might have been 18 months ago on this metric, between 8 and 10 o'clock. So generally, you know, obviously a lot of people talking about the city of Brisbane at the moment, very high opinion score, but some of these others that are growing quite quickly, like Bundaberg is just really starting to grow more recently. Gold Coast is really, but Cairns has come on very strongly in the last few months. So you can see that even though it's stagnated at between 8 and 10 o'clock on the property clock, opinion might start really driving in a local government area. Okay, I might switch back over a little bit again. If you've got any questions at any time, guys, please let me know. Please jump in and stop me if you need to. If things are a little bit blurry, I do apologise. Potentially refresh the browser window. It might change and clear things up a little bit. I've just realised we've had questions and chat coming from both sides, so over on the YouTube link and also over in the webcast software. So hi to all those people that have been commenting over there about the software. RJ, Janine, I'll get to those questions. I think they're more generic and I might grab to them at the end, if that's okay. If it has been a little bit fuzzy and unclear, what you can see is we're very quickly getting down to LGAs and we'll soon get into particular suburbs, but this is going to be recorded and you can see this on YouTube, which we'll post very shortly after the webcast, okay? So I might jump back over now to look how we can actually start to find suburbs set for immediate growth. So even if Brisbane itself is, you know, at an LGA level and the AI has said, yep, this LGA looks very positive, there are only going to be certain suburbs that are actually pushing and driving that growth. Some of them are going to be stagnant and not doing anything. Some of them may be actually going backwards. So we have to find the absolute pinnacle of opportunity in that LGA to deliver growth from day one. Not in 6 months, not 6 months previous. It has to be when we purchase. And to do that, a bit of a secret, and this is a takeaway, is buyer behaviour is the key. We want to get in and track buyer behaviour, people moving towards that local government area and suburb for the same reasons en masse. We want to track that. We want to measure it. We want to find when that's most likely to deliver growth. Then we want to buy. And then we want that opinion score to keep increasing and the masses to turn their eyeballs against that suburban LGA. And then that masses of investor interest and other owner occupiers, etc., coming in en group, en masse. That's what's going to deliver our growth, outstanding capital growth, okay? So that's what it's all about. We want to beat the masses and not join them. We want to be able to do that. And probably a key there is some of this, the data, etc., that you're seeing is out there in other places, but there is a time that it takes to be collated and put together. So sales volume or yields, etc., metrics that have a really strong correlation to growth, if it takes you 6 weeks or 8 weeks for the source to gather that information and then even maybe generate a report, that's a 10-week window where things are out of date and behind. So when you look at this information and data, it has to be live. It has to be up to date as of today. Good. Ripehouse as a platform goes across the internet constantly. It's doing that every 8 hours. It's going across the whole, every suburb in the country, every listing in the country across all major real estate, like Google does. It's looking at all of those listings across the country, updating them and constantly recalculating things at a property, street, suburb, and LGA, or even into a state level. That means that you've got up-to-date information to be able to base your decisions on. Okay, so we want to target the suburbs. Getting back to this, I'm sorry for that little tangent. We want to get to the suburbs that have been lying dormant potentially. They may have been doing reasonable things, but there's no correlation potentially to future performance. We want to wait for the stars to align and then set for that imminent and immediate growth, okay? So what I mean by that is hockey stick growth. It's about the suburb maybe lying dormant. This is a few graphs here where things are really trying to work out what's going on in the market in a certain metric, world carbon emissions, whatever it may be. Wherever you're dealing with complex data, you've got all of these different metrics going in different directions, pushing and pulling. They might be falling over each other for a while, then they all align. The stars align for very consistent reasons and things rocket off. And we want to position ourselves just before that occurs and buckle ourselves in for that outstanding growth. So this is a hockey stick chart. We don't want to be buying and holding and having opportunity costs without performance. We want to position ourselves just when things are about to move. An actual example, before I go over to actually showing you how you can find suburbs using Ripehouse research and tools that are leading the charge, just an example here of Guy Williams, who's a Ripehouse investor. In the first 10 months of his usage of the software, going back in 2015, he purchased 10 properties, okay? 10 properties, the average annualized capital growth of each of those 10 properties was 25%. 105% cash on cash returns, 6.25% average yields. Absolutely outstanding results. This is consistent with being able to use research and tools to be able to put ourselves in front of that growth curve. Buying well, obviously negotiating right, getting the property right, being able to find distress and negotiate against that. I'll show you how to do all of that in a moment, but it's all about being able to generate outstanding capital growth returns. So if you want more information on Guy's story, jump across to the Frontier Investor. Anna is the editor of the Frontier Investor. She interviewed Guy in a series of 4 parts. In part 2, from memory, right down the bottom, you can actually go through each of the 10 properties that Guy purchased, look at all the returns, exactly how he did it, where, why, and the yields, etc. So go through the Frontier Investor. It's an amazing resource. I'd love to hear your feedback. For any of you on the line who have been using the Frontier Investor, please let us know what you've been liking, what you've been really getting into and dissecting and learning a lot from. I'd love to hear any of that feedback right now on the line if you can. Let's jump right into that. Guy's example. This is the importance of it. This is the upside if you get it right. In terms of the drivers at a suburb level, I'm going to show you in a moment how you find the suburbs, but this is another takeaway, which I think it's worth making this point before we jump into the tools again. Some of the drivers, some of the buyer behavior stuff, some of the real life elements, the stars aligning in a suburb. This is just an example, and it happens in lots of different ways at the local government area and at a street level. But this is just an example of how the stars align at a suburb level and how the artificial intelligence can track these things with many more, using the human touch to actually predict and find pockets of potential and recommend suburb streets and properties to you. Okay, so this is what it's doing in a very simplistic approach. You can see how it's based on buyer behavior, but in a local government area into a suburb now, you see increased demand. So increased demand from people wanting to rent and buy in that suburb, but generally it's rent first. So that might be because of train lines, it might be because of mine or a new employer, it might be because buses to the beach have been opened up, it might be because new shopping centres. Any of these things that increase demand, utility to live in the suburb, increasing demand, that's what we're looking for, okay? But we're not actually tracking that demand because we've got one layer advanced metrics that we track that actually demonstrate that demand. The first one that generally starts happening is you start seeing rents increasing. So people moving to that area for that utility, that employment, whatever it may be, they're coming to rent first. They're giving it a try. So rents start being pushed up. Then yields are actually moving in line with rents because you haven't had any price growth yet. So yields are going up with rents. It's a really strong sign of this starting to occur. Okay, sales volumes start trending upwards. So a few months later, 6 months later, after rents have gone up, after yields have gone up, those people start going, this is working really well living in this area. We love it. Let's buy. Investors have started to turn their eyes towards this LGA and chasing these great yields. They're going, wow, this is, really, the numbers are really working for me. Those guys together are joining together with the current normal demand in the suburb to increase the demand pool and drive up sales volumes. Okay. Developers may have already been onto this. They may have already been putting stock into market, new builds. So if sales volumes are going up, but days on market are also going up, it means you might have some supply side issues. So lots of new stock coming to the market. If sales volumes are going up and days on market are steady and decreasing, this is when all of the stars are aligning and growth occurs. Growth is imminent, okay? So there's a lot of sensitivity around the days and the weeks when all this is happening. A lot of other metrics that the AI engine can process and digest and improve, but it generally only opens up for about 8 to 10 weeks as the optimum buying window. And if you can see if you've got a lag in any way of processing this information or increasing your catchment area, you can sometimes miss that buying window, and that means the growth is already occurring. Lower sophisticated investors are coming in en masse, and you're having to compete against those guys to purchase property. You know, you've got lots of offers on the same properties, and it's becoming very difficult. So how do we find those suburbs? Let's jump across to the tools again. You can remember I've clicked on, we've got the LGAs now filtered. We've got a very short list of them. Let's actually use an LGA a little bit different than normal. We'll click on the Sunshine Coast, okay? So Sunshine Coast doing really positive things. It's right up there in terms of the property clock information. It's already got a high opinion score. Lots of 115 suburbs in this local government area. So a lot of different markets, a lot of different reasons why people might be living here. This particular tool is the Explore the Nation page. And what we're doing, the purpose of this page is to absolutely position and help you find that #1 property of potential, suburb of potential in the local government area. And it does that in a really visual way that a lot of people can relate to. So the higher the opinion score, the more eyeballs are already there in experts and positive sentiment, okay? The higher the metric score, the higher the AI, the data, the research, the more possibility of imminent growth, okay? So the higher that score, more likely of imminent growth. The more eyeballs, the more Ripehouse users, the more investor interest that's already occurring, the more likely you're going to be competing with other offers, etc., the higher the interest score. So it might be worth trying to get suburbs before they move there. Hint, before they move means you can click on this button here, which is the undercover button, and it will go across the whole country and show you all suburbs in the country that are absolutely prime position to deliver growth without any interest at all, okay? So based on what your risk tolerance is, what you'd like to do, you can actually click on these predefined strategies here. Investability, that means there's more properties on the market in demand in the key sweet spot streets, so more on that later. And income means that yields are strong and also reliable, so low vacancies, etc. We can see #1 on the list, Warana. I can click on that and I can go into the street level and property level research tool within Ripehouse. More on this later. I just might pause things there and just go back and just illustrate the point and the importance of getting our street right. It's very important. Okay, so turn the screws, get the street right. This is all a very critical component to getting our outstanding capital growth. And the AI, the Ripehouse brain, does this innately. It does it very powerfully. But you know, as a local, I suppose, which individual streets that need to be avoided in your suburb, the areas that are complete dead spots no one wants to touch. You know those. How can we do this across the country in those #1 markets of potential? So that's what it's all about. How can we find these streets to be avoided? How can we find those streets set to deliver outstanding growth? We call them the Ripehouse sweet spots. It's a key component of delivering that growth. If you think of people coming to that area, moving there for jobs, etc., they're generally very similar. They're doing things for similar reasons. They want similar properties in similar streets. If you get that wrong, you've missed that whole net migration. You've missed the whole sweet spot. You've missed the whole growth upside in some cases. So it's really important. It's critical in a lot of cases. What does it mean? Well, if you get it right, our research has shown there's 5 key components of this at the street level. If you get it right, you can actually expect 21.9% above average returns in relative terms compared to the remainder of the suburb overall, okay? So there's only about 10 to 15% of each suburb that is the sweet spot as we define it. And if you invest in those sweet spots and the suburb increases by 4%, you can actually expect about 5% capital growth in average across the whole country. Obviously, it's just it's demonstrating critically importance of getting that street level right, okay? In Sydney, if we invested today, this is just projections, but over the next 10 years, if you get that sweet spot right, expect about $240,000 in above and beyond returns. Really important. So this is a takeaway again. Ripehouse, the AI engine, does this very powerfully and automatically. It gets it right. The sweet spot is a combination of 5 things that is present on each street. We have a huge amount of data and research at a street level in the country. But if you get this right, low public housing concentration in the street, under 15% is a general rule. Lots of the in-demand property types, so people are moving towards the area for houses, 3 or 4 bedroom houses, making sure that street has lots of 3 or 4 bedroom houses. It's not an ugly duckling, a white elephant that you're buying, or you're getting the right type of property in the wrong street. You're really matching that demand in that street. And the street also has good, strong tenant demand, high rent, high yields, and strong tenant demand to show that it's in those streets that people are moving towards en masse. Okay, that's what it's all about. If you get that right, expect it's only about 10 to 15% of each suburb in a street level that is the sweet spot. But if you get it right, as you can see, 21.9% relative above and beyond growth. So yeah, when I mean 21.9%, I don't mean 4 plus 21.9% is 25.9%. I mean, if the suburb went up 4%, expect almost 5% capital growth in that same period. Really important. Let's show you how to do it. So we've clicked on Morana there. We've gone into the suburb research tool. The street and property research tool. This is our map-based analysis page. You can see it's beautiful oceanfront area there. You've got the new hospital going in just south of Morana. It's a very, very attractive location in terms of amenity, demand, utility, very focused. You can see it was a #1 suburb on our list. You can see it on a street level, some amazing things within Ripe House. The darker the red here in terms of these 200 dwelling blocks. The darker the red, the higher the public housing percentage. Some of these areas are 6.6, 6.7% public housing. Very low public housing in Morana, not really a problem. There's going to be no areas above that 15% tolerance. You can see exactly where own occupiers or renters live. So own occupiers along the beach, generally, renters back inland. You can see where houses in the green, units in the yellow. You can see where higher rents are achieved, where higher yields are achieved. This is for every suburb across the country. Extremely powerful. This page allows you to view street and suburb versus suburb information. So suburbs, this is a very strong yielding suburb compared to its neighbours. You've got a lot of toggles over here on the right-hand side at a suburb versus suburb level. You can see all for rent properties or sold properties in recent times. You can see suburb reports and neighbourhood comparisons. You can see a huge amount and process a huge amount of information on this page. You can view all on-market listings. You can see how long they've been on the market for and if they've been discounted. So this one here has been discounted 1% in the last 24 days that's been on the market. Incredible resource, but what we want to do here, we want to find the individual sweet spot streets, okay? Only that really small percentage of the suburb. You can do that really quickly and easily by clicking on this pop-up. You can control the exact tolerances that you're looking for. Remember those 5 metrics, it's automatically pre-filled them here, and it's going to show you the exact streets in the suburb for us to focus our attention. Now, we want to focus on the in-demand property type. There was a pop-up at the start when the page loaded that told us that 3 or 4 bedroom houses are most popular and in demand. We program that in and it will filter all of the current on-market properties, which there are a few, down to 12 individual properties very quickly that are the absolute pinnacle of opportunity. So you can see how we've come down through a whole funnel, state, LGA, suburb, street, and now properties. 5 layers, you've got down to 12 properties. You can see some of them are out of our price range, under contract already. There's 3 commoditized, so 3 or 4 properties across the whole country for this strategy. This is a manual process. The artificial intelligence engine does this automatically for you. It's doing it at a much more effective and a much more accurate rate. It's actually improving upon it. It's doing this across many different 5 layers of funnels and getting you to the absolute pinnacle of opportunity, which I'll show you in a moment. But you can see how we've got very quickly down to specific properties. Next job is appraising and negotiating like a pro. So betting the heat, getting into these properties, then we must reliably assess market value, condition comparables to the property to be able to appraise and negotiate for success. That's what it's all about. Can we actually buy under market? So the way we can do that, let's just click this one on the top here. We can click the more button. What it's telling us, sorry, I might just skip out of this one and get one with more complete information. So this one here, it's been on the market for 3 days. That one was going to take a few more seconds to load there. I want to get into this really quickly. I want to get to the Robo search page. So this property has got all of the images sucked in really quickly. We can assess condition. It's very neutrally presented, but it's in average condition, unrenovated condition. This is really, I suppose, middle market, hitting the market here. We are manually appraising and assessing the condition of this property. Doing that, we're putting the property into 3 buckets, poor, average, or good. I will put this into average. The algorithms technology actually has a shot at assessing the condition of this property based on other properties, based on the way that the agent talks about the property and based on the way that that agent talks about other properties, okay? So in this case, it's got it wrong, but it wasn't very sure of itself. So we're actually going to override that, and the technology is going to learn from what we do and improve it going forward. We can see previous listing history for this property, only came on the market very recently. We can see suburb information, street level information. It's going to go away now and find the absolute 5 most likely comparables. I would encourage you to never rely on automated evaluation, okay? You need to own the process of looking at these comparables. If this property sold for 717, it's jumping out at you, is it superior or not? You need to take that out as a comparable if you do deem it superior, okay? So this process, if you do, is about controlling and owning the process of these comparables, because then, critically, you can use them to negotiate and potentially buy under market. Once you're happy with your 5 comparables, it will average those. It will tell you how the property is potentially affected by school, shops, transport, and public housing. It's changing the appraised value. You can see in this case, 550 is our appraisal. Asking price is actually 550. Estimated rent's 430. Have any questions, any doubts, second opinion? Click on the Ask Wipehouse button. It will come through to us, and we will give you a second opinion on those properties. So you can see it's incredibly powerful, the end-to-end process. I'd love to hear any questions, any comments. I can jump in whilst we're going through at any time. Please let me know. But what I want to show you now, and I'll do this together with you in actual live terms, is the Robo search page here at Wipehouse. Okay, this is really new, but it's been in the workings for 18 months and backed on to a lot of the techniques and algorithms and research and tools that we've been building for 5 years here at Wipehouse. It's incredibly powerful. It's going to do everything you saw there far more effectively to a much higher degree in seconds. It's going to do it right in front of you, okay? And it's going to take a lot of the emotion and subjectivity out of that process. So introducing Wipehouse Robo Search. It's using the Wipehouse brain. It's simple, intuitive, and incredibly powerful. Let's jump in there right now, and I'll invite you to do this together with me, and we'll do it as I'm doing it for myself, and you do it for yourself. The properties might be different down the bottom end of it. It's going to be particularly, the beauty of this is the individual properties that are recommended are specifically suited to how you have talked to the system and what you've done and what you've told to it. Okay, so your results are going to be different to mine, but let's do this together. Okay, I'm just going to log out. So I'm going to be just like anyone that's coming to the site without the subscriber as a dashboard. I've logged out. I've now come to the Wipehouse homepage. I click on the Get Started button. That takes me to the Robo Search page. So a few ways of doing this. You can come in here and you can actually dial up your preferred strategy. If you really want to have a strong bias towards capital growth, you can dial this up yourself. Okay, there's a lot of information around what that means and how to do that on the page, and you can read our ebook to understand what those dials mean, the different strategies, okay? Or you can reset the page. You can come up here and take the survey. This is a really quick survey. I'll invite you all to jump across to this page now. So it's www.wipehouse.com.au/robosearch. Type it in, click on Take the Survey, and we can go through this together because it's going to dial up our recommended strategy. It might be different to what you're actually thinking, and then at the moment, it will show you in real terms the exact suburbs and properties that are recommended to you. They've all been automatically and manually appraised, and they're ranked in order of the most likely properties to be able to be purchased under market value. So equity straight off the bat. So let's take the survey. I'm 34. I currently own my own home with mortgage. I'll click continue. I own dedicated investment properties already, and I'm financially independent. I was able to stop working 3 years ago from property investment. My next purchase I'll be actually funding by accessing equity in a current asset without selling. I'm looking at purchasing 4 in the next 12 months. Probably 10 in the next 3 years, and there'll be probably another 15 total in 10 years. I'll be winding down and looking at higher price points. So I'll just give you a few moments to fill that out with me. And so this is, feel free to copy my answers if you like, but if you'd like to enter in your own, it's going to be very specific recommendations for what you're trying to do. So let's click on continue. I live in 7,000 as a postcode. In terms of my next investment, I don't mind where it's located as long as it's an optimum purchase for my strategy. Okay, so that's where I'm increasing my catchment area and demonstrating that I'm happy to do that. What best describes my stage in life is still turning up the screws and building an asset base. What is my primary investment motivation? So now it's net worth and asset base. In 5 years, it's passive income. In 20 years, it's actually funding and improving my retirement. So it's just giving you a bit of an understanding about what you're trying to do and when you're trying to do it. Click on continue. In the next 5 years, the following best describes my primary investment goal. So for me, it's actually building an asset base still, just another way of answering that question. And when deciding how to invest in property, what do I care about more? For me, it's maximising gains. The Australian property market might be volatile. If your entire portfolio lost 10% of its value during a market decline, what would you do? I would actually buy more. In terms of renovation or improvement of a property, I have actually installed a kitchen on the back of a trailer in a weekend in the Newcastle area, going back with my wife and I a few years now, but yes, I have done a lot of that myself. In terms of ambition or even interest, I am not interested in learning or developing any further my renovation skills, and I would prefer now, after acquisition, to set and forget. So that's just a really quick snapshot of what I'm doing, and you're answering this at the same time. In terms of structural improvement, I've actually haven't done any structural improvement or subdivisions. I've started, but I haven't completed. I've gone down to the passive route now, so I wouldn't say I'm experienced and followed that process through to the end. Rank each of these in terms of importance to you. Stress-free tenancy is critically important to me. Cash flow and higher yields is very important. Cosmetic renovation opportunity is not important. Newer builds with depreciation upside is important, is my answers. Click on continue and enter in your address. I'm just going to be entering a test address here. That will be confirmed and that will be your login. So it's important to use an address that you can actually readily access and use. Here I'm just using this just to process. So this is where the magic is happening. It's going away and looking at your answers and now recommending your dials. So your recommended strategic outcomes. Okay, so this is what it's recommended to me. This is based on your answers. So you need to own that process. But what I'm going to do here, I'm going to actually override these dials because for the purposes tonight, if you can remember and promise, we are focusing on capital growth and very strong yields together. Okay, so I'm actually going to override this and dial up 80%, so very strong on the capital growth dial. I'm going to dial up 80% on the cash flow dial, and I'm going to dial down scarcity, and I'm going to dial down development. Okay. Scarcity means a low risk strategy. So if you think those people in Sydney, the closer you are to eastern suburbs, the beach or the CBD, very scarce, longer tenured owner occupier driven markets, a different set of methodologies. And the AI, the Ripe House brain is doing things in a very different way based on the different dials, okay? So in this case, let's look for really strong growth, really strong cash flow, 80-80, and I'll click on done. Here, I can specify any specific constraints for me. Personally, I'm going to leave that because first round through, I want to see the absolute most potential possible, most number of, or largest number of properties. So I'm going to leave that open. I'll click on done. This is where the AI, the Ripe House brain is doing its thing, its magic. It's actually going away and calculating all of those manual steps, but doing it to a much larger and higher degree. It's finding 18 specific suburb locations. So that's not actually 18 suburbs, it's 18 specific sweet spot areas within those suburbs. Local government state, local government area, street, suburbs, street, sorry, and properties. It's joining up that whole funnel to find very specific areas of opportunity. So it is estimating that if you invested in if the on-demand properties in these areas, these locations, you can expect, based on previous performance with the back-checking recommendations, 15.2% capital growth in the next 12 months. It's giving you a really quick snapshot of the breakdown of the suburbs. And for Ripe House subscribers, you can obviously see the suburbs themselves to go in and do that research. Very, very powerful. Okay, I'm going to leave all of those. You can actually remove suburbs. You can remove whole states if you like. I'm going to leave all of those 18 locations. Click on done. It's actually now gone away in real terms and found 102 properties in those 18 locations set for amazing growth, where you see a green tick. The number 1 property on this list has the highest estimated equity score or amount. This is a dollar figure. Okay, the higher the estimated equity amount, that is the difference between the estimated sale price. So this property is expected to sell for $180,000, and the appraised value. So it's actually appraised at $220,000. So the estimated equity on that property at purchase is $40,000. That's how they're ranked. So this property has more estimated equity at purchase than the second property on the list, and so on and so forth. You can also see that this is estimated to have a 1-year profit of $73,000. So that's combining 15.2% capital growth with that equity on purchase to give you a number to be able to potentially put into your spreadsheet. So nothing is certain, obviously no crystal balls, but this is usually technology to be able to provide expectations around outcome. We can see appraised rent is $240,000, estimated yield is 6.8%. Days on market 127. It's been average in the suburb is 101. The actual asking price of this is 200,000. Okay, this property, the address is withheld. Okay, so that's only reserved for Ripe House subscribers. If you want more information on that property, you can click on the inquire button. You can fill in the details here. That'll come through to us as a request, and we'll get back to you with the details of this property for you to be able to action. Okay, this property at the top here, the number 1 opportunity for this strategy. I've called the agent myself. And did a process of negotiating. So these numbers here actually have ticks against them. So for the purpose of this illustration tonight, I've actually done that manually. But here, with the agent, I actually negotiated it as such without representing anybody, just for my own purposes of research, negotiated with the agent down to $180,000 on this property without much to do at an asking price of $200,000. I've been able to appraise it up to $220,000. That is not why the green ticks are on here, but you can see that a lot of other properties have green ticks too. That means that myself and my team have gone in and manually appraised these properties. So these estimated equity amounts here are actually based on real humans going in and giving their opinion on appraised value and rent and sale price, very importantly, not asking price, but sale price, to give an estimated equity on purchase amount. So not all are in the positive. Some of them are actually negative. They are ranked in that order. You can rank them in order of yield or distress if you're so desired. So this property is the second one, 7.7% yield in the Ipswich area. Obviously addresses withheld again. Equity on purchase 15,000, so slightly lower equity on purchase, 7.7% yield. You can see how easily we've got 102 properties, absolute outstanding candidates for both growth and cash flow together. And you can see how easily it's come to you, and you can see it, and you can understand the process that we have got to for it. So I'd love to hear any questions, any feedback. Let's keep this dynamic in terms of using it and understanding it. But I might just move along. So what you've seen, I just wanted to say before we get into the Q&A session, I understand and look at the time and how we're going with it. But I might just pause before we do that and just say a big thank you in terms of if you've made it through this content, you've understood it, you've engaged with it, you're obviously pretty excited about property. I'm really excited about property. I love talking to other investors and working with you guys and you know, seeing and seeing success with the software and the tools. That's what it's all about. It's about DIY property investors helping other DIY property investors. So thank you for making it this far, sincerely. But I really hope you're really excited about charging towards growth and delivering amazing results to you, I suppose, for your investment journey. And if Ripe House can be a part of that and help and improve and empower you, that makes me really happy and proud. So Q&As. Ripe House is a subscription service. Okay, so generally to the public, it's available for $1,597 per annum, only available on an annual basis because of the time and the money and the effort that we spend on developing the tools. For annual subscribers only at $1,597 per annum. Okay, so that's not the price you see here. I've already, as a thank you offer, organised and discounted that $400 down to $1,197. Okay, so I can say that is only available until 11 p.m. tonight, and then the doors are shut on that offer. One of the ways that we support you at Ripe House is with learning. We have a learning centre which has a huge amount of tutorial, FAQs, content resources, but also regular research reports for different strategies. Okay, so you can use those as your desktop companion. They're usually $97 each to the public. We're including them all to you with this thank you offer to come and join us this evening until 11 o'clock. Okay, you get full Ripe House search, Robo search access, and the ability to click on that. You can see the suburb names and the ability to click on the inquire button and have us talk to you about the address of that property and disclose that to you. So that is available to you as a subscriber. You're able to click on that inquire button. You're able to use all of the research tools that you've seen tonight, the 5 layers of manual research, all of that private content, the design your own strategy interfaces, etc. That is all opened up for you. Also, not mentioned here, we have private webcasts and coaching events that we do when new areas are emerging. We take the time to engage with local experts in that area to put the content and expert information in front of you. So that altogether is over $1,800 of bonus value. Package is a big thank you. Before I go on to just sort of letting you know how you can get involved with that offer, Ripe House is also used by lots of others in the industry. Okay, so researchers, educators, buyers agents, and investors, and lots of investors doing similar things, looking for amazing growth, cash flow, renovate for profit strategies, and even development strategies. What I've done tonight is a capital growth demonstration. There is a different way you can use the software for targeting different strategies, development opportunities, and renovate for profit, which can be a whole other webcast. How to lock this bonus in? www.ripehouse.com.au/bonus. Only available until 11 o'clock tonight. Click on the green Get Started button to $1,197 with that $400 thank you locked in. Payment is processed via Stripe. Incredibly secure, best in class security. Your information is sent directly from you to Stripe and back. It's not held by us. It's an international, very secure payment processor. So that's all done through the www.ripehouse.com.au/bonus page. Click on the green Get Started button. You'll be then asked to enter in your basic email, name, and phone number. Click on the subscribe button. That's when you enter in your credit card information to process that payment there and then. You'll receive a welcome pack, invites to research reports, and getting started information. It all comes straight through to you. The keys have been thrown. We are on hand at all times for live chat support, 1300 support, live Australian customer service support. Any questions at any time, please feel free to reach out and ask. It's all about DIY investors, helping you as a DIY investor and empowering ourselves with technology and information, and then decisions, being able to actually make them and enact. Okay, I might just put the mute button on for a few moments and gather up the questions. Anything at all, get them coming through now. I'll gather them up. If you don't want to stick around for the Q&A, I really appreciate you coming and taking the time out on a Thursday, spending the time with me, and hopefully you've learned something. You've been able to take some information, some new ways of thinking away, and being able to employ those yourself. So if you don't want to stick around, thank you so much. For those of you who do, I'll see you on the other side in a few moments. Okay, I might start jumping through them. So RJ's asked, do we have monthly subscriptions? No. As just mentioned, sorry, RJ, I've probably already covered that, but I'll just cover it again. Everything we have to build in, we spend a lot of time on research and development and improving. We're always constantly improving and trying to empower you in different ways. That is only available via an annual subscription. Everything you see is opened up via that subscription. Craig has just asked, what's distress? Okay, so the distress score, that's an internal algorithm that we use. We look at the average days on market in the suburb, how long has that property been on the market, how that compares, has the listing been discounted, are there signs of distress in that listing being discounted, was it stale, was it at the same price for 6 months and now it's been very quickly discounted multiple times in multiple weeks. It's showing very strong signs of distress. Sometimes the agent and the vendor don't get on very well to start with, and they might want to go into a private listing, and then it goes to an auction. They might have price withheld, then they have a listing price. When they do that flip-flopping back and forth, it is showing distress. So we are talking about vendor distress. They need to sell very urgently, but you're also talking about distress created in the listing itself by mismanagement or bad marketing, okay? So we've quantified that. We've developed scoring around it, and we use that to also estimate the likely sales price of the property and give you a distress score. Let me know if that clarifies things for you. Another question here about how can you appraise all the properties on the market? Isn't this high time-intensive process? Yes, it is. We're not effectively. So there's different layers of appraisals. Okay, so there's multiple sources and companies, etc., that do automated valuations. Computer-based valuations. They look at comparables. They try and assess value, etc. None of those get that close. That hasn't been solved. Things are trying to improve in that area. I don't think until software and technology can actually visually assess an image and go, yes, that is a Caesarstone bench top that would have cost $8,000, and people are willing to pay $8,000 more for a property in that suburb because of that bench top, and it's in good condition, and the walls are in a certain colour and neutral, the bathroom's renovated. Technology can't do that yet. So any automated valuation is inherently inaccurate. So how we get around that? We have an internal valuation algorithm that does that, but it also tries to look at condition of the property based on how the selling agent describes the property. That obviously is always positive, but different levels of positive and how that agent describes different properties in different ways, we can learn a lot from it. And when users coming in and overriding that, it's learning, it's improving. So you're able to put properties into different buckets, and then you're able to then look for other comparables more likely to be in a similar condition. So that's one way of scaling that automated valuation process. Our software also looks at the location of property, public housing concentrations, shopping, schools, transport, and public housing to determine the appraised value. But that's only going to get you so far. Okay, so all of those green ticks on those properties, we're not appraising manually every property on the market. We are appraising only those properties that are showing up on people's Robo search pages. So a lot of you are looking at the same properties. A lot of you have a similar strategic outcome, similar dials, and we're having a lot of overlap in those properties. So not all properties have the green ticks on them. Just as an example, in-house here, we process 330 appraisals using our software in a 48-hour period last week, as an example. Okay, so we have the technology, the interfaces and the administration interfaces with the staff to be able to go through and methodically appraise those based on what we have in front of us. So that's not a formal valuation. It needs to be stressed. It's not a formal bank valuation or approved valuation. It is an opinion using an AVM process and given to you as an estimated opinion of that appraisal, if that makes sense. So it still doesn't replace physically inspecting the property, having a walkthrough inspection and appraisal. That is the third layer of reliance, okay, and that is still not done at that point, if that makes sense. Does that answer your question there, Andre? Let me know anything more on that. Couple of other questions coming through. I am aware of time, but they are quite or subjective to individual areas or individual people's strategies. So I might answer those offline in terms of I'll hang up the phone now, but I'll stick around on the written chat and I'll get to all of these questions individually, one-on-one, so I can chat back and forth on this chat bar here. So I'll stick around. Otherwise, we've got live chat on the page and I'll be jumping on there as well to field any questions. So I'd love to hear any feedback, any questions you've still got or feedback, positive or negative, things we can improve, things that you really love. please jump on a chat and let me know. It'll be really, really helpful. I just hope, as an investor myself, that you've learned something, you've empowered yourself with information and been able to really move forward together, and you've got some takeaways from this evening. So big thank you for attending. Hope you found it useful, and until next time, happy investing. Thank you.